بسم الله الرحمن الرحيم الحمد لله وصلى الله على نبينا محمد وعلى آله وصحبه أجمعين. I want to start by saying to everybody in the room, Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank
you for that response. At least it gives me an assurance that I'm being heard. That's quite important. Well, let me begin by also appreciating the organizers of today's webinar, the Island Muslim community, in conjunction with the Non-Interest Financial Association of Nigeria, NIFIAN. This is a very good and highly commendable move. If we see this kind of synergy between members, influential members of our communities, coming in synergy with the practitioners of Islamic finance, I think is something that we must commend, because with that, I believe we will be better positioned to achieve most, if not all, of our objectives as Muslims. The Almighty Allah reward all of them. I specifically appreciate Alaji FBT, who described me as being his friend. I'm his younger brother. I would prefer that quality rather than being his friend. But I thank Almighty Allah for him. Ever since I knew him, I've always been meeting with him in capacities like this. Anything relating to development of Muslims, development of Islam, Islamic community. I've had the opportunity of sitting on some board and some meetings with him. And that's why I'm not surprised when I saw his name also coming up as the chairman of today's event. My prayer is that Almighty Allah continue to strengthen him, to continue to guide him to this right path, and give him all what it takes in terms of resources, health, long life, to continue to render the meritorious services to the Muslim Ummah. I also recognize in absentia my sister, Laja Hajara Adiola, and my brother, Dr. Bashir Osodi. There is no way we can write the history of Islamic finance in Nigeria without the two of you occupying a monumental space. And I meant what I said, not only the two of you, but I said the two of you will actually, among others, will occupy conspicuous spaces in recognition of what you have all done to the development, to the introduction in the first place, and the development of Islamic finance in our dear country, Nigeria. So may Allah reward all of you and all of us, and accept whatever we put forward in this respect as act of ibadah that we hope that Almighty Allah will reward us adequately of that, inshallah ta'ala. So having said this, let me now go straight to my presentation, which is titled Government-Funded Empowerment Programs, What Roles for Islamic Financial Institutions? Thank you, the host. Yeah, that is the first slide. What we have on that slide is just the an overview of when we are talking of government-funded programs. I know some people may like to ask, what are those? Where are they? Because some people do not even know of the existence of those interventions, of those empowerment programs, and they are meant for Nigerians generally. My own assessment of the situation is that, particularly the Muslim community of Nigeria, we do not have enough or sufficient information in relation to these interventions or government-funded programs. And that is why I have just listed this one. I said the old ones. So these are the old interventions. What I mean by old interventions, I think most of them, if not all, have been stopped. The reason being that with the coming of the new administration under President Bola Ahmed Tinubu, ISFR, we had a change in direction of how the Central Bank of Nigeria should actually operate. They want to actually move Central Bank away from these interventions so that it can concentrate on the monetary policy aspect of the administration. So these ones, I'm not sure. I'm not sure whether they will reintroduce them, but as far as CBN is concerned, I learned they have all stopped, but they are old ones that we may have in the house, those who have benefited from them. More importantly now, let's move to the next slide, the new programs. When the current administration discontinued CBN's interventions, it introduced new ones. And I intentionally gathered these pieces of information for us as part of what I want us to go home with as benefit from this webinar. Information is power. We need to even have information about the existence of those programs, which I doubt most of us, I mean the Muslims in Nigeria, I doubt whether we have the sufficient information. So this, we have consumer credit scheme, we have student loan scheme, Nigerian Education Loan Fund, we have youth CNG, which is a program to distribute free as a grant, 2,000 CNG powered keke napep to Nigerians, irrespective of their religious or ethnic affiliations. Number 4 is Government Enterprise and Empowerment Program, GEEP. This one is meant for artisans, women cooperative societies, small-scale farmers, and so on and so forth. We also have number 5, Investment in Digital and Creative Enterprises Program. This is specifically targeting youth who are in the range of 15 to 35 years of age. If you are a Nigerian youth, you are 15 or above, and less than 35 or less years of age, then this program is actually meant for you, for your class. Then we have Presidential Conditional Grant Scheme, PCGS. There is FGN MSME Intervention Fund. There is FGN Manufacturing Sector Fund. I want to believe some of us in this seminar, we may be hearing of these interventions or schemes for the first time. But I want to assure you, many Nigerians have benefited in billions of naira from these interventions. These last 3 that I mentioned have been operationalized through Bank of Industry. I think they have about almost 200 billion naira at their disposal to distribute, to disburse to eligible Nigerians that you and I are part of the eligible Nigerians. So we must have the information. That is one area that I want to emphasize. We need to push for more information to be readily available to our communities, to our youth, to our farmers, to our industrialists, so that they can also benefit from these interventions that are meant for them as Nigerians. I know a lot of Nigerians have benefited and are still benefiting. So we shouldn't be left out of these benefits. Okay, so now what are the common features and what are the dissimilarities between these different interventions and empowerment programs that I've mentioned, either of old or even of new? There are 2 key things here. When we want to group them, we can categorize them along the method of disbursement of the funds under each and every one of these schemes. Is either disbursed directly, this is what I call direct disbursement, or indirect disbursement. Direct disbursement without any intermediary, any financial intermediary. That is, without any bank being involved, without any financial institution being involved. You can just produce your bank account and you will have the fund landing in your account without having to go to do any documentation in any bank. That is the direct disbursement. Some of these schemes and interventions are not directly disbursed. You have to go through banks. And I think this is an area that is of importance to us in this seminar, because the topic of our discussion this evening is the roles of non-interest financial institutions. So what are the roles in indirect disbursement? We shall talk on that one as we move on. Another categorization of all of these schemes and interventions, they are either interest-based or non-interest-based in terms of application now. Disbursement, either direct or indirect. Application is either interest-based, meaning that you get the fund, but with a condition attached to that, that you will pay back and you will pay certain percentage of interest when you are repaying. Or it will be non-interest in nature. So these are the two approaches to application generally of federal government of Nigeria's interventions or empowerment programs. Now, to the topic of the day. To this extent, I've attempted, and I want to believe that I've succeeded to a very large extent in giving you the background knowledge, the necessary information about what are the programs, what are the interventions. Now, the second leg of our topic, which is quite important, is what roles can Islamic financial institutions play? What roles can the practitioners in that sector have? The likes of Alhaja Adeola, Dr. Bashir, and others, the NIFIAN members. What's your role? What's your role? The roles of Islamic financial institutions here also have divided those roles into two. They have statutory roles that by law, they are to play those roles. In other words, it may not be even voluntary for them. They may be mandated to play those roles as long as they remain financial institutions. Then later we shall talk about non-statutory roles. And I will spend more time on that one because that is what I think will benefit us in a gathering like this. What roles are we expecting them to play, even if they are not mandated to play such a role? This is their statutory roles, roles of Islamic financial institutions. Don't forget, you have to relate this to the earlier slide where I divided the programs to either direct or indirect. They will have roles to play. Do they have roles to play in the direct disbursement schemes? Simply put, their role, if any, in the direct disbursement scheme is very, very limited. Very, very limited. Like I told you, in the direct disbursement scheme, the only role I think they play is to provide a bank account. And the bank account is not provided for this intervention alone. So if the beneficiary has already has an account with a bank, with a non-interest financial institutions, so that is the only role expected of them in this regard, because the disbursement is direct from government or government agency. Government will appoint a specific agency of it to disburse and will disburse directly to the beneficiaries. The roles of Islamic financial institutions that are statutory, roles of IFAs in indirect disbursement. Yes, in indirect disbursement, this is where they have enormous roles to play. Unlike what applies to direct disbursement from government agency to the beneficiary. Here, it will pass through financial institutions, banks, and other financial institutions. So in the indirect disbursement, I asked rhetorically, I asked a question here. Why would the government opt for indirect disbursement? We may ask ourselves that question. If it is possible for government to disburse directly, isn't that better? Why would government opt for indirect disbursement? And I will tell you why. Why would a government opt for indirect disbursement? is because all these interventions and schemes, they are not risk-free. There is an element of risk embedded in almost all of them, except for the ones that are grant-free, like CNG, CNG keke napep to be distributed free of charge. This one may not have any risk attached to it. But in almost every other intervention or scheme, there is a risk attached to it. And government will like to pass that risk to who is more competent to manage them, to manage it. I beg your pardon. Let me come again, to be fair to the government. It's not a matter of they don't want to distribute or to disburse directly. But when you have particularly what we call credit risk is a significant risk in banking, in financing. And this is what is known as the risk of the third party. It means no matter what you do, the inaction or misaction of a third party may affect you. For example, if you disburse, if you give out facility, financing, and the beneficiary is expected to pay back at a particular point of time. If he doesn't pay, that's a risk. If he pays, but he did not pay on time, that's equally a credit risk. And the credit risk is very, very significant in any financial application. So in short, the government would like to pass that risk to institutions that are better equipped. They are better positioned. That is their job as financial institutions, to look for ways of managing, taming, controlling the credit risk that is associated with these interventions. So as I said, credit risk, particularly in Islamic financial institutions, every institution, whether it is conventional or Islamic, must prepare itself for risk management, particularly credit risk management. But Islamic financial institutions is even at a higher level of risk, credit risk, when we are talking of credit risk. And this is my position in even my PhD thesis. My PhD thesis in Islamic law was centered on this area of practice, how to manage credit risk in Islamic financial institutions. So in summary, this is why the government will definitely like to disburse indirectly, especially where there is an element of risk, credit risk. It will like to pass it to financial institutions. Now, I'm now talking to you, the Islamic financial institutions. When the government passes this risk to you, do you see that as an advantage or a disadvantage? If you are seeing that as a disadvantage, I want you to disabuse your minds from that one. It's actually an advantage for you. It's an advantage for you if you are asked to key in an intervention and you will be the one to bear and manage and control the credit risk aspect of the application. Don't ever see it. This is one of your roles. Don't see that, because we've seen in the past, unfortunately, that our Islamic financial institutions always hesitate to access government interventions. And this is a fact. They hesitate. You see their conventional counterpart showing more interest in accessing those interventions and by extension, allowing their customers to benefit. On the contrary, what we see, this is an evidence-based submission. What you have seen is that enthusiasm, that passion and interest is not high in our Islamic financial institutions. And I want to believe because they are seeing that element of risk being passed to them by the government as a disadvantage. It is not. You have to look at it, have a second look at it, the way I'm going to address it now. You will start seeing it as an advantage and not a disadvantage. And I think that one will encourage you to do more, because your record in this respect is not encouraging. It's not encouraging. Why did I say it's an advantage? We have a golden rule golden rule of Islamic financial transactions generally, which says, Al-Gunmu bil-Gurmi wal-Kharaju bi-Ad-Daman. That is the Sharia principle. We call it the golden principle of Islamic finance. What does that mean? It means simply, risk begets reward and revenue follows liability. That is it. It's only when you take risk, you assume risk, as far as Islamic law, Islamic finance is concerned, that you will be entitled to any amount of benefit. So you must be happy that you have been asked to take risk. That's why I said you should look at it, see it as an advantage and not a disadvantage, because you must understand your own practice of banking. You can only be entitled to benefit, to return, to profits, to whatever, when you take risk. Otherwise, you don't. You are not entitled. So I want you to please consider this golden principle of Islamic law that you all know, I know, but some of the applications may not be so clear to you. That is what a discussion like this will bring up. So it's an advantage because it passes risk to you, and you are better equipped. You know you must have a risk management strategy and apparatus in your institution. No financial institution in the world today can survive without having strong risk management system in place. So that is just about that. The government would like to opt for indirect disbursement. Imagine almost 90% of those old and new interventions that I mentioned, usually government would not like to take the credit risk. They would like to invite financial institutions to be the intermediary between them so that they can be sure that whatever is disbursed, at least even if it is the capital alone, will come back, or even if it is capital and amount of return, which is legitimate, if it is halal, can also come back to the government. So that is why they do that. Do Islamic financial institutions, do they have any role to play in the interest-based scheme? The answer is no, and capital no. And I want to also sincerely talk to my brothers and sisters in NIFIAN, in Islamic financial industries. You shouldn't have any role to play in anything interest-based. It's against the license you are holding. You are licensed as a non-interest bank or non-interest financial institution. So whatever they are doing that is interest-based, you should take your eyes and ears, whatever, take your body completely away from that. Unfortunately, we are seeing some practices that are unethical from some of the Islamic bankers or Islamic financial practitioners. You may say because we want to trade with them, we also place some of our fund that we have in excess. You can't do that. As long as what they are doing is interest-based, you are a non-interest-based organization. By Sharia, you are not allowed to do that. And even by law, you are not allowed to do that. It negates the license you are holding. So let's move now to where you have the biggest role to play. And that is when the interventions are non-interest based. Then you ask me, how many of those interventions are non-interest based? The answer to that is, when you are asking of the old ones, yes, almost all of them have both interest-based and non-interest-based, which we worked on as a team to produce when we were asked to do that. So, and that is why you were able to key into those interventions when they were being offered, because there are versions that are non-interest-based. But unfortunately, and this is a challenge to the likes of LGBT and other stakeholders, the present ones that we have under the present administration, at least up till today, they have not given us any alternative. All what is being rolled out up till this moment is interest-based. They are all interest-based. And that is part of what I think we should come up with a solution to from this seminar. And that is why I praise the synergy between these two important segments of our society: the influential people in the society, the stakeholders, and the practitioners. So this is a challenge that I know they are facing, because they are not even allowed now to go into those new interventions by virtue of their license, because they are non-interest financial institutions. And I am telling you, Up till this moment, we have not had anything about Sharia compliant or non-interest alternative. How did we achieve that in the past? Please go and ask those who played the roles that enable us to have in the past. There are some of them or all of them are still alive. I think we discuss with them and see what we need to do, also to get non-interest based or non-interest alternative for the present regimes of interventions of the present administration. We need to do that because when we do that, we are not favoring the likes of Aja Adiola and Dr. Bashir. Yes, their institution will also benefit, but primarily we are favoring the generality of the Nigerian Muslims, especially those who are conscious of the do's and don'ts of their religion, the serious Muslims who know that the riba or interest is a no-go area. So we should not kind of disenfranchise them or exclude them from what should be for the totality of Nigerians. That is the point I'm making. And we have succeeded in doing that in the past. I think we put necessary effort this time around, but it should be easier because the government has a precedent to fall back on. It's not a new thing. They have a precedent that they can just, oh, have we done it before? Yes, we've done it before. So your roles are essentially, even statutory, we are still on statutory roles on the non-interest-based schemes. Now, non-statutory roles of Islamic financial institutions. A quick flashback, I said statutory roles, they may not even have a choice. If central bank tells them to do it, they must do it, they know, as financial institution. But what is more important to a gathering like this, and to NIFIAN, and to the stakeholders, island Muslim community and others, is to look at what are the expected non-statutory roles of Islamic financial institutions. Number one, awareness creation. And that is very, very important. People need to be informed about these interventions. NIFIAN, Islamic financial institution generally, you have a key role to play here. That is your area of practice. So this issue of awareness creation is a serious problem. And I know Dr. Bashir, even Aja Adiola, will bear witness to this. Each time I have an opportunity of talking to you people in any gathering, public or private, I always emphasize this, that I don't believe you are doing enough to disseminate information about Islamic finance generally. You need to do more. When you look at countries that have succeeded, you will mention the likes of Malaysia. If you look at what Malaysia did, it is on record between 1993 and 2003, 10 solid years. That is an era known in the development of Islamic finance in Malaysia as being the era of awareness creation. Strategic, aggressive, comprehensive awareness creation. So it's only when they finish that stage that they move to another stage. They call it financial liberation, which continued from 2004 to 2010, before they now move 2011 upward to what they tagged as regulatory reforms stage. I think we have not done that, or we have not done enough in relation to that in Nigeria. I'm not saying awareness creation for Muslims alone, even for non-Muslim, rather. When I say create awareness, some people say, because we need to tell the non-Muslim they shouldn't fear anything. It's not about Islamization. Yes, it's part of it. But even among Muslims, how many Muslims know what exactly Islamic finance is and what Islamic finance is not? They don't know what it is. And they don't know what it is not. They have many wrong information in circulation. So I think this is one important role that I want to see you, Islamic financial institutions, playing going forward. You should have a program for a very serious, aggressive, comprehensive, and strategic information dissemination programs. It's very important. It will aid what you are going to. This is your area of practice. and it will be of immense benefit to the generality of Nigerians, not just Muslims, because interest or riba is not only prohibited in the Quran, it's equally prohibited in the Bible. So we have a lot of non-Muslims too who do not want to engage in interest-based transactions, but they need information. They need information. As we are talking of information, the power of information, yes, but we should also be beware of the menace of misinformation and disinformation. Unfortunately, as we are still battling with information dissemination, we didn't have enough. What complicated our matter in Nigeria is that alongside, we have many disinformation and misinformation. What I mean by misinformation is a genuine mistake in informing people about the product of Islamic finance. You misinform people. You may not be deliberate. It may not be intentional. But unfortunately, we have seen enough evidence of disinformation. Some of your marketers are actually disinforming people, deliberately hiding some necessary facts from them by way of disinforming them, because they will fear if we tell them this, they may not buy our product. I will give you an example. How many of you marketing Islamic financial product will tell people about what happens in any event of loss? I don't see you doing that. It's only what you tell them is profit. This is where how we share profit. What if there is loss? This is what makes Islamic finance unique, that we share in both, in profit and loss. So please, you need to look at that one. When you are working on how to improve our information dissemination, try to also remove, eliminate completely this menace of either misinformation or disinformation. And I will also tell you, part of what my research has led me into, part of my findings is that, you see, this information from your marketers, there are factors underlying, there are underlying factors for them, and I've identified two. One of them is lack of understanding. They themselves do not even understand. And that is why I quoted the legal principle here in law. We usually say, nemo dat quod non habet. You can't give what you don't have. That's a fact. What you don't have, you can't give. So an Islamic financial marketer that is just coming from conventional banks, some of them have been in conventional bank for 10 years or more, coming to Islamic bank or financial institution without adequate training. Adequate training doesn't mean you train him once, one off, and that is all. You continue to train him, expose him to new developments in the industry. So this is the first factor. Some of them do not even know. They themselves, they don't understand. When they explain to you, you see that they lack the proper understanding of their product, whether murabaha, mudaraba, musharaka, and so on and so forth. I wonder why an Islamic bank should use the same method of setting targets for its marketers, the same way they do in conventional. Whether by whatever means, just meet your target. It's not ideal. It's unethical. It's antithetical to what Islamic finance stands on. So please look at those factors. There is a lot of misinformation and disinformation, and I'm giving you free of charge. You know, as a researcher, I will use many hours, days, months to do research. Then we come up with findings. So I'm giving you the findings free, Dr. Bashir, Raja, Adiola, and others, that you need to improve on understanding of your marketers. They should have proper understanding, because what they don't know, they can't give. Then the other factor is some of them understand, but because they are under pressure to meet the target, go and look for 500 million, go and look for how many customers, go and whether good or bad, this is an ethical organization. Islamic finance is based on ethics and Sharia compliance before everything. I've said about what Islamic finance is and what Islamic finance is not. As I said, it's not only non-Muslim. Even Muslims need to be enlightened about what Islamic finance is all about, what these interventions are all about. How are the interest-based interventions different from non-interest-based interventions? They need enough information. A lot of people still see you, Islamic financial institutions, as Zakah and Sadaqa Foundation, that you shouldn't charge anything, you shouldn't have even a return or profit. So that is how they see you. But you have to tell people, let them see clearly what you stand for, that you are a business organization, but ethically guided and Sharia-led into whatever you do. What I've also observed in this issue of misinformation, disinformation, I said overzealousness in advertisement and the consequential reputational risk. So marketers of Islamic financial products, because they want to simplify everything, they say, no, they're almost the same thing. They are almost the same. Then the question is, if they are the same thing, why are you taking another license? Why must we go all this length of struggling to have you? Because I hear some people saying, no, some people will even say, no, it's not even Islamic, it's non-interest. What do you mean? It's Islamic. All over the world, it is Islam that brought non-interest financial institutions. So because some people are overzealous, they want to simplify, they want to attract customers that will say, no, I don't want anything religious. If he doesn't want anything religious, then Islamic finance is not the way to go for him. But you have to tell them Islamic finance is universal. It does not discriminate in whatever sense against non-Muslims. Go to Malaysia that I mentioned. The majority, what do you call it? Shareholders of Islamic banks are non-Muslims. Come here to Nigeria too. I will tell you if you want to know. Major shareholders in Islamic banks that are non-Muslims. So this is what we should push forward. It's a fact, but it's Islamic. It must look like Sharia compliant, even in the mode of dressing of your marketers. Some people are actually discouraged from even patronizing Islamic banks again because of the way ladies coming to market Islamic financial products, the way they dress. So you have to look into all that. So if you don't, then you will end up having what we call reputational risk. It will damage your reputation as an organization that is ethical, that is Sharia compliant. I think we've said enough about this issue of awareness creation because it is very, very important. Let me tell you one more finding of some of my research efforts in the past. In 2022, that's 2 years ago, while I was in Kuru Jos, I focused on how to use Islamic financial products in mass house production in Nigeria as a policy that government may embark upon. So I carried out a lot of surveys, interviews, and what have you. A key finding from my work is that number one threat is that people do not know what it is. Awareness creation is not enough. The moment they hear Islamic bank, Islamic finance, they are scared. So that's why I emphasize this issue of awareness creation. And I think NIFIAN is in a good position to play that role. Number two, advocacy is also expected of NIFIAN. I said NIFIAN in focus, particularly NIFIAN in focus. Yes, you need to do a lot of advocacy. And alhamdulillah, I listened to Dr. Bashir Oshodi, the vice president of NIFIAN, in his welcome address. He reminded us of the genesis of what we call Islamic Bank, Islamic finance in Nigeria today. It started with advocacy. Alhamdulillah, he was part of the effort from the beginning. This advocacy is what I think you have relented in your effort. You need to do more advocacy. Advocacy to government, advocacy to stakeholders, advocacies to communities at communities level. At every level, you need to do more advocacy. Where you need to talk to government, talk to government. You are a registered body. And you know, you have an advantage. What is that advantage? Government has licensed you as non-interest financial institution, represented by the central bank, for example. Now, you have a good case to say our customers are being deprived of the benefit of interventions because they won't come to us because they say our own is non-interest and we are operating legitimate business licensed by the government. They will listen to you. They will listen to you better than the way they will listen to Alaji Ebiti or other stakeholders. Because yes, you have a license, we have licensed you to operate, and we must cater for your interest. We must cater for the interest of your customers. So this is what I meant by having advocacy. And you have very strong constitutional backing in whatever you do. Look at section 16.1 of the 1999 Constitution as amended. It says clearly, the state, that is Nigeria, shall, within the context of the ideals and objectives for which provisions are made in this constitution, control the national economy in such manner as to secure the maximum welfare, freedom, and happiness of every citizen. Every citizen, nobody should be left out, on the basis of social justice and equality of status and opportunity. Equality of status and opportunity. So there will never be equality of status and opportunity when we have a very large percentage of Nigerians being excluded from our interventions. It is even counterproductive for us as a nation. So this is what another role that I think you need to play and play effectively. Number 3, as your role, product development is also a role that it is only you that can play it. You need to show your ingenuity, your creativity in bringing out new product that will attract people's attention and interest. And I said product development, I mean genuine product development, not mimicking. The danger of copy and paste or find and replace product. From my experience, we've seen a lot of examples. When we see some papers before us to review as a regulator, we realize that some people believe that what makes a product to become Islamic is for you to just change interest to profit. And they will do find and replace. You know, in what? You just type, I think it's Control H. Find every interest, replace with profit. And they will think that that has made it Sharia compliant. It is not. It's not. So you have to look deeper. And that's why you have Sharia committees. You have advisory committees of experts all over the places. So please make sure you engage in real, genuine product development and not just mimicking the conventional ones. That will even may cost you your reputation as an organization, because people will start saying, what is even the difference between what they call interest-based and non-interest-based? So you have to be careful. And here you have another opportunity, another advantage in Sharia. We have in Sharia another golden rule that says presumption of validity in financial transactions. Al-aslu fil ashya or fil mu'amalat al-ibaha. It is presumed that everything is valid when we are talking of business in Islamic law. It's the opposite when we are talking of act of worship, ibadah. Nothing is valid until we see a proof in Quran or Sunnah that, oh, this kind of ibadah is valid. That is when you can do it. But the opposite is true, is correct when you are talking of finance, when you're talking of business and transactions. That is the beauty of Islam. It is presumed that everything you bring, every idea is valid until we discover that, oh, in this area, you have gone against a particular rule of Sharia. Then all what you need to do is to remove that element of prohibition and it will remain halal. So it gives you more room, more space, larger space to be creative, to be innovative in bringing up new product that will be attractive to the populace. Number 5 is active participation. Active participation is also a role we expect from you. You know, you must understand your work as Islamic financial institutions. You are not expected to be armchair experts. And Islamic financial practitioners must come to the markets. You know this. But unfortunately, the behavior of some today, they are behaving like conventional bankers who will sit under the AC and complete every transaction. They are not concerned about whatever goes on ground, in the market, in the farm that you are financing, in the industry that you are financing. Islamic finance is not like that. And you know better. It's not like that. This is a quote from my inaugural lecture of 2021, and I'm repeating it here. I said, without necessarily losing their identity as financial intermediaries, Islamic banks must be ready to come into the picture as traders, as lessors, as partners. And this is what makes Islamic finance a unique system. That is the truth. We must see you as traders, as lessors, as partners. And that is why the law has allowed you to do all this, even if it doesn't allow the conventional bankers to do that, because it understands the peculiarity, the specificity of your practice. And that is why under the law, under our law in Nigeria today, you are not classified as a commercial bank. An Islamic bank is not classified as a commercial bank. You are recognized under the law as a specialized bank. It's for a purpose. Sorry. It's for a purpose. When you look at BOFIA 2020, Bank and Other Financial Institutions Act, that is the primary legislation on the banking and financial sector, it actually places you under what it's called specialized bank. You must be specialized, truly. So this is what I mean by active participation. And that is the beauty of Islamic finance. It's developmental. It's about real sector of the economy. It must ensure goods and services are produced before you can lay claim to any dividend or return. But where there are no goods, there are no services, no development, that is not Islamic bank. That is not Islamic banking. So please, I'm encouraging you. I know you are trying, but you need to do more to be actively involved whenever you have interventions of this nature. Because you see, I have a very terrible experience in the past. And that is what I put here, a case study, role of vendors in the CBN non-interest intervention scheme. When those interventions were being offered to the public, because Islamic financial institutions, you are not actively participating. There wasn't enough participation. The vendors took the day and they bastardized the whole thing, I must say, unfortunately. What we told them to do in the structure is that, okay, CBN is not giving you money because it's not money lending that will pay interest. That is the difference between interest-based and non-interest-based. What will CBN give you? CBN will say, identify what you want to use the money for. Oh, I'm into rice production. I need a machine to purify my product or whatever. Do they call it rice milling machine or whatever? I'm into block making. I'm block molding for bricklayers to build. So I need equipment to make it, to facilitate my business. So they will ask you, what do you want to do? I need a generating set to power my office. I need a computer set. CBN will buy those instruments for you and sell to you. That is how Islamic Bank will work. Islamic Bank is not you sit back and just issue money and expect return to be paid back with interest. No. But you know what those vendors, majority of them, what they did? And CBN identified them as vendors. You are the ones selling. CBN cannot be into every market, selling generating sales, selling machines, selling whatever. So it identifies them that, okay, so go to vendor and take the product. The vendor will just tell, this is practically. Some people who experienced it came to complain to me. I also escalated some of their complaints to the authorities then, and some vendors were actually sanctioned. But it's unfortunate that we found ourselves in that mess. They will just tell them, look, we just told them we have instrument. We don't have any instrument though, but you know, what is approved for you is 500,000 naira, for example. That is the price of the equipment you want to buy. But why would you buy any equipment? Just let's share the money. We give you 450 and we take 50. Bye-bye. Don't buy anything. Is that Islamic finance? It's not. But this is the reality. I received a lot of complaints. Not only that, I escalated them to the appropriate authorities, and some vendors were sanctioned. But what led us into all this is the inactivity, if I may put it that way, real active participation that we want to see in future. Because as I said in what I've quoted from my inaugural lecture, you are different from conventional bankers. You are traders, you are lessors, you are partners in business. The Makosid consideration in the Nigerian Islamic finance practice, is it a fact or a myth? A question for Dr. Bashir and others. We all talk about Makosid. That is the fundamental objectives. Whatever we do as Muslims, these are the guiding principles. If I trade, I'm trading because I want to actualize an objective of Islamic law, of Sharia. If I'm in business, if I'm in anything, even I'm worshiping Almighty Allah. Now let's look at Makosid consideration in the Nigerian Islamic finance practice. I said, is it a fact or a myth? Why am I saying this? I said, Islamic finance, is it for wealth transfer or value creation? We have to answer those questions honestly. Is it for more profit maximization or for economic emancipation of our people? It is only when we answer these questions, and it depends on how we answer them, that we will now behave in line with that. It will actually guide our behavior. Are we in Islamic finance just to transfer wealth from A to B without creating any added value? That is not Islamic finance. Islamic finance, as I told you, is developmental. It ensures goods and practices are produced and services are produced and values are created. Is it also for profit maximization alone or for economic emancipation? If you read in the history of the development of Islamic finance, the founding fathers, their intention of introducing Islamic finance, Islamic economics, is to emancipate the Muslim community that are being cheated, that are being disadvantaged because of the prevailing system. Are we actually still pursuing that objective, or we have petitioned that objective and only pursuing the objective of profit maximization? Get me right. I'm not saying either of these. You can combine both. Maximize your profit, but do not jeopardize economic emancipation of the Muslim communities. So this is a question for all of us, particularly the practitioners. Are we in the business to create value or just to transfer wealth? Are we in the business to just make sure our shareholders are happy with us at the end of the year when we declare the amount of profit we generated, whether that has impact on emancipation of the populace from poverty or not? If it is Islamic that we want to do, we need to think deeply. We need to think deeply. And this is one of, I identify some steps that I think if you will take, will be in the right direction of creating value, of maximizing profit, and at the same time, emancipating our people economically. We need to create partnership between Islamic financial institutions and local communities for sustainable development. We need to have, you see, one unique opportunity that I've seen in government interventions is that it helps people that are just starting a business. You all know it's not easy for a starter, what we call greenfield project, somebody that has just graduated to start a new business, go to any bank to seek facility. It's not easy. They will ask him collateral, they will ask him this or that. But this is a unique opportunity in government intervention. Government is not interested in how many years have you been in the business. Even if you have just started, you are just starting. That is part of the benefit of government intervention. It will embrace all of you, whether you are of greenfield or brownfield project, and the need for affordable security or collateral. Part of what we experienced in the past, our past experiences in government interventions, is that sometimes you will be surprised that the requirement, you know, as I told you, government will pass credit risk to financial institutions. And legitimately, we are not saying you are wrong, legitimately you must find ways of managing the credit risk that you are bearing. But be mindful of the objective of Islamic law, overall objective, Makosid. When you are asking these people of what you know they can never afford, what is beyond their capacity, you are asking for collateral security of that nature. I know of an Islamic bank without mentioning name. When people come, you know the requirement, ask whoever is guaranteeing you to attach signed post-dated check. And I ask my question, instead of signing post-dated signed check, why don't you just give him money if you want to assist him? So if you, unless maybe between a father and a son, even an uncle cannot do that. Sign post-dated check for a boy that is just starting up or whatever. So we need to look into that. And I'm saying this because we compare your practices sometimes, the practices of conventional banks, they are more lenient in what they ask for as collateral security. Again, you have that right. It's legitimate for you to manage your risk, but be reasonable in the methods, in the approaches that you take in managing those risks. I said, does this align with our Islamic financial objective or target? The big question. And finally, the disturbing figures of Islamic financial institution assets. I've mentioned that one. We compared the figures of how many Nigerians actually accessed government intervention through conventional banks and how many Nigerians accessed government interventions through non-interest or Islamic banks. The difference is too clear. So the figures we had from you, from Islamic banks, it's not encouraging. The figure is not encouraging at all. I don't know why. That's why I said we may need to ask you here from NIFIAN why. Maybe you can come in with a solution. But the truth of the matter is that very few amount of people were able to access those interventions through non-interest financial institutions, while a lot of people actually access through the interest-based one. Well, alhamdulillah, this is my submission. And whatever is right, whatever is correct in it is from Almighty Allah and through His blessing alone. Whatever is an error, a mistake, I bear that and I seek forgiveness from Almighty Allah. And I want to thank you once again, the organizers and the audience. Without you, we cannot have a successful webinar. I thank all of you and may Almighty Allah reward all of us. Wassalamu alaikum wa rahmatullah.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thanks, Prof.
Wa alaikum salam wa rahmatullahi wa barakatuh.
Yeah, we're very grateful. I mean, as a moderator, I'm not going to bother to try and summarize your work because of time. It's been done perfectly well. We're extremely grateful to you, Prof. I think I want us to jump into questions. Maybe spend the next 20 minutes on questions because of Maghrib time, depending on where you are, where everyone is. I don't know. We want to take 5 questions first. Prof will answer them, and then we'll take another set of 5 questions. Anyone with questions?
Assalamu alaikum.
Wa alaikum salam. Your name, please, and then the question, please. Thank you.
Okay, Dr. Bashir Oyeyemi is the name. I would like to know, is there any way the cooperative societies that are Islamic based can be supported by the banks to help in the Islamic financial, other Islamic banks to assess these facilities that have been given by government?
Okay, thank you very much, Dr. Bashir. Next question, please. We'll take 5 together, and then Prof can take them all together.
Assalamu alaikum. I put mine in the chat.
Oh, okay, lovely. Okay, let me just look at the chat room. Prof shall elaborate on the issue of security collateral. What is the right? Or is it right? So, Prof, we want you to kindly talk a little more about collateral and security in finance.
Okay.
There's another question. I want you to ask about scholarship route for graduates of Islamic finance to study Islamic finance, for master's level. I don't know if Prof would take that. There's another question. My question is, what are the collaborating agencies that are working with government funders? Prof, I don't know if those questions are clear. So I think we have 5 questions now.
Assalamu alaikum.
Wa alaikum salam. Okay, I'll just take one more, please. Yeah.
Okay, thank you very much to Prof for the enlightening lecture in some insights into as regards to Nigeria. But the question was the student
your
loan.
Name, please, and the question. Your name, please, and the question.
My name is Ayo Salami. So my question is the student loan scheme that the government recently established. We learned that it's interest-free. Is that correct? And if not, what options are there for Nigerian students who are Muslims to explore? Thank you.
Okay, thank you, Prof. Salami. Prof, I'll allow you to take the questions.
Thank you. The first question is about how, what can the non-interest financial Islamic financial institutions do to assist cooperative societies to access the government interventions? Very simple. There is what we call group financing. And this is well known to Islamic finance practitioners. It helps them, it helps the beneficiaries. Rather than you coming as an individual, if you form yourself into cooperative societies, you will mutually guarantee one another. That is the benefit. You know that when you are 10, if anybody, one of you defaults, it will affect the interest of the remaining 9. You will be on his or her neck not to default. So it's a way out that you can form yourself into cooperative societies instead of approaching any Islamic financial institutions for a facility, whether government or not government-owned facilities. It's better if you can come up as a cooperative society to get what you call group financing. That's the way out that I think government can, the Islamic financial institutions can actually be of assistance for you to access the interventions. So on the second question about security and collateral, well, let me make it clear, and I've said it on some occasions too. Islamic law allows security or collateral taking. But is in Al-Quran al-Kareem. Farihanun makbudatun. That is in chapter 2 of Al-Quran al-Kareem. So if you want to deal with anybody and you are afraid that he may default, in Islam, it is allowed for an institution or even for an individual ask for collateral or security. But what we are saying is that be lenient and be reasonable enough. Don't make this issue of collateral security to become an obstacle, especially when we are talking of interventions by government that are meant to benefit people.
So basically, in reality, what government has done is, just like Prof explained earlier on, they have a number of funds. You know, some of them are, again, BOI, somebody mentioned BOI. BOI is there, Bank of Industry. You have Development Bank of Nigeria. I think there's Murphy, Ministry of Housing Incorporated, but they have their own special program. Aside other funds, you know, that Prof mentioned today. So again, like Prof mentioned, you have to get most of these funds must go into the banks, not even fund management companies, but banks, right? There's another question. Prof should elaborate on the issue of security. Prof has talked about that. That was mentioned in the Quran, that you must always give security. You know, of course, the Prophet ﷺ, he borrowed money from a Jew. In some other hadiths, he bought food from a Jew and dropped his armor as collateral. There's another question, please. What is the position of Forex with the use of AI, artificial intelligence? Probably don't take it, but if you go to the classical hadiths, you know, the Prophet said money on money is not allowed, of the same currency. Gold on gold is not allowed. Silver on silver is not allowed. Date on date is not allowed. However, gold for silver is allowed, right? And so on the back of that, Sharia scholars, you know, will allow element of FX, but it has to be on spot. You know, some other Sharia scholars have argued, you know, they try to define what spot is. If you're doing a transaction in Malaysia today on a Friday, right, or in Nigeria on a Friday, and want somebody to receive money in Malaysia that same day, the person is not going to receive that money until the Monday, very early in the morning before you wake up, right? So some scholars have agreed that that kind of transaction can be spot, right? So again, there are loads of scholarly opinion with regards to spot. Again, your question is using AI, artificial intelligence. What we usually do in Sharia is that we look at the process. We take the process to the Sharia board to say, is this process fine? So again, for this question, I'm not going to give an absolute answer, but it then means that somebody will have to come up with a particular process on how that particular AI works, right? Sharia scholars will then look at it and give an opinion or a fatwa. There's another question. A first-class Islamic, okay, that's not quite a question. BOI, I'm going to skip it again. I want Prof to make clarifications on non-interest financial institutions, balancing between wealth generation and the value creation objectives of Sharia. You know, from our end, there exist many misrepresentations on this regard, in this regard. So the democracy, like Prof tried to mention, has to do with the protection of a lot of things, you know, life, you know, the human self, you know, faith, you know, intellect, prosperity. The fifth one I just forgot. Now, more importantly, Sharia scholars looking at the works of Imam Al-Ghazali and co. They talk about the fact that, you know, it has to impact communities positively, theoretically. You know, practically, we've not seen that impact in Nigeria. What they've done in Malaysia is that they've done a lot of research to look at indicators. So they look at, say, protection of intellect, right? What are the things that make up intellect? Going to school, going to primary school, going to secondary school, going to university, getting good grades, doing courses that are relevant, that will help development. So they identified several indicators. On the back of these indicators, they then said, okay, you know, if you can fit in there properly, then you're going to be taking part in the protection of intellect, for example, and then the protection of wealth, right? If you generate wealth in a particular format, again, they came up with loads of indicators. They measured them over the years. They then did the kind of yield curve to see the impact of all of these things. Now, practically in our own world, right, I must confess, Professor Larry also mentioned it, Islamic banks and Islamic financial institutions are still struggling to stay firm on their feet, you know, in terms of being profitable, in terms of ensuring people pay back, in terms of ensuring that these don't go bad. Now, because of all of these things, you know, there's a misplacement of the maqasid, right? And again, in the case of more recently, NIFIAN is having a partnership with the Malaysian Association, a similar body. And one of the things we're trying to explore is for them to do training for us, capacity building, looking at aspects of takaful, fund management, and banking, right? Specifically, what they've done, how we can learn from them, you know, and align Islamic finance with the maqasid. So to answer this question very quickly, we're not there yet. Even though we do a bit of social, you know, corporate social responsibility, but that interaction, that perfect one, for example, enhancement or protection of faith, right? The human faith, or sorry, of faith now, we've not done anything in that area. So what they've done so well, of course, then posterity, the future generation, how are we going to protect them? Islamic banks are not even talking about that yet, I must confess. I'm also in that market, right? And that's because, again, like I mentioned, you know, it's first about survival. Now, Islamic banks have to bring in more capital. So while Islamic banks are thinking that we're going to get more capital, if you tell them that, hey, are you not going to support enhancement of faith or intellect or posterity or human self or wealth, they're going to be like, hey, you know, we need to survive first. So those are the realities in an economy, and the incentive that is required to make Islamic funds to come up with socially inclined products is still absent. Again, we're hoping that as we have more Islamic banks come up, we're going to be seeing changes. Now, there's another question here. Assalamu alaikum wa barakatuh. I am happily impressed, Prof. Sir. Mine is not but an observation in terms of Maghrib prayer. Okay, permission to go. Okay, that's fine. There's another question. How can we reach out to bodies like NSCIA, Supreme Council for Islamic Affairs, to lobby and leverage on National Assembly to ensure intervention fund? So again, NIFIAN is working hard on this. As I speak with you right now, there are loads of letters about to be, you know, about to be disbursed or delivered, as you like, you know, as you like it. With regards to this intervention fund, most of the time, it's not about just that I want to see the parties involved, the MD of the companies, you know, the CEOs, the parties. I don't think we need National Assembly at this time. it's for the leadership of those government agencies to say, hey, we're willing to deal, right? So again, I don't want to talk specifically now, but what has happened generally is that I'm aware that a lot of institutions, one or two are doing that right now. They're able to use Wakala contracts, that is agency contract, to disburse money to non-interest banks. Right, they've done a few, but again, on a lighter note, banks particularly can raise money at the total cost of their fund can be 5% or less. That's because the bulk of their fund is in current account. When you take intervention fund, sometimes it comes at a much higher price. So sometimes banks then weigh the options. Do we take this fund or do we just rely on our current account, right? Again, I'm not going to go beyond that. Let me move to the next question because of time. There's a question here. How can one well, there's something about authentic means or link to enjoy government intervention without any political hand. Okay. So again, unfortunately, Islamic finance players have not really experienced intervention funds in Nigeria, I must confess. That experience is almost absent, right? Again, it's not as if there have not been efforts, but just like Prof mentioned, we need to do a lot more so that we can get these funds. Again, the political thing is basically relationship. I want to call it relationship. We have a good relationship with the leadership of these institutions, things can happen. Of course, that means that they must agree to use Sharia compliant contracts, right? There's another question there. Are these funds accessible to the contemporary microfinance banks? Yes, all the banks can. Microfinance banks can, Sharia compliant or non-interest microfinance banks can benefit. Again, the same issue is, will that institution make it Sharia compliant? Will they accept the use of Wakala or Muraba or double Muraba, right? As the case may be, or even Mudaraba, as the case may be, to disburse money. That's why the institution 3 years ago decided to create liquidity management instruments using Wakala and Mudaraba, approved by the central bank, where all the Sharia scholars sat and said, we're going to go with this. And CBN has approved that. However, other methods can be used too. The double Muraba like IDB or ICD uses. That can be a perfect one. And in some cases, one can restructure as the case may be. Now, is the phrase working on NIFIAN license issuance for finance companies? Yes, finance companies, their capital has not been moved. It's still 100 million, right? It's been left at 100 million. I'm aware of 2 companies now, 2 individuals who are trying to get non-interest license using, of course, having the finance house license that's Sharia compliant. I'm also, of course, the guidelines that we have for non-interest banks allow you to do microfinance, finance house, even merchant banks. If you want to do, non-interest merchant bank, of course, the more popular one is the regular window or standalone, right? But yes, we can, on the back of the guidelines for finance house and the guidelines for non-interest financial institution, you can apply for financial license, and the capital is still 100 million, except it's going to change tomorrow. Now, how do Muslim organizations get involved in the incubation stage of the empowerment initiative to ensure inclusion of non-interest finance? I think really, you have to keep it simple because of time. It's just collaboration, really. In the incubation stage of the empowerment initiatives. So it has to be collaboration. But again, if you look at the market very well, because a lot of, if you like, those that are not from our faith, let me use that liberal term, because a lot of them are used to banking, right? They're used to doing business. So it's very easy for them to walk into a bank and say, hey, I need 20 million naira to expand my business, right? And they can offer them Sharia compliant product. But because people from our faith are not particularly, involved in business as such, compared to those not from our faith, you then see little collaboration. So the bulk of those using non-interest finance on the asset side, by assets, I mean loan, we don't use the word loan, right? But on the facility side, the bulk of them are still not from the faith that we thought they would be from. There's another question: how do we explain that the returns paid on sukuk issued by government is not interest? You know, under Islamic finance, there's equity, there's debt. Equity, debt. Equity is equity. That is, there could be profit, there may be no profit. You lose all your principal and you can even lose your potential profits, right? In the case of equity. Equity is basically your mudaraba and your musharaka, right? Let's not go there. There's also debt. In the case of debt, there are three broad debt structures. You know, there is the muraba structure. You know, let me just say two broad categories. There's the sale option and there's the lease option. The sale option means that I buy this pen for 100 naira for you, and I sell it I buy it from whoever is selling or I buy a phone from Samsung for 100,000 naira, and I sell it to you for 120. So you can see there's a 20% markup in the case of sale. Other form of sale includes salam. You know, the asset does not exist in case of agricultural produce, and in case of maybe mining and all of that. And there's another form of sale in case of construction. The house does not exist, but you can actually say, hey, I'm paying 100 million for this house, right? You buy for 100 million from developer, you sell to the obligor, the case may be. Now, there's also the lease mode. In the case of the lease, it can also be a fixed markup, you know, call it rentals, to keep it simple. You know, in other jurisdictions, there's the option of variable rentals. But in Nigeria, because the market is used to fixed return, right? Federal government decided to use Ijara for the Jara, right? For the Sukuk, which means that there's a fixed return on it. So in the case of debt, right? Where in the case of particularly the lease structure, you know, we're not using the variable rental, it means that the fixed rental is allowed and it can then give you fixed income, right? And because it's backed by the full faith of the federal government, it then means that there's no risk. You know what I'm saying? So on the back of that, you can receive fixed income on Ijara assets, or if you like, Ijara Sukuk, right? So again, there could be Ijara transactions where they are variable, where you have variable rentals. In that case, the ceiling and the floor will be defined at the time of signing the contract. Please speak to the scholarship. Okay, so I'm not aware of scholarships, to be frank. I'm not aware of scholarship in Islamic finance. Most of the time, you know, except the bank is giving you a non-interest loan, right? A non-interest called ASAN. So there are cases where Islamic banks in Nigeria give non-interest loan. I've also benefited from such, I must confess, where the bank gave me non-interest. I mean, you know, it's even an international code, but I was working in that particular bank. They gave me non-interest loan, you know, to pay for the fee, but it was very expensive, right? But I'm not aware of scholarship. So, any other question that comes in, if you don't mind, if you send them to NIFIAN or to IMC, we can address them and then of course share our answers, our concerns, as the case may be. On this note, I'm going to call Alhaji Ebiti again to kindly give us the closing remarks, right? And thereafter, we can have the closing prayer and end this session. Alhaji, over to you, please.
Thank you so much, everyone. Assalamu alaikum wa rahmatullahi wa barakatuh once again. We have tremendously benefited from the expertise of the guest lecturer, and there are a lot of takeaways. I think there's somebody talking about scholarship. They should get in touch with Dr. Shudi so that we can move ourselves forward. I think there is a lot to be done, and we should repeat more of this webinar so that we can inform ourselves and then we can remain focused. May Almighty Allah make it easy for us. I need to thank each and every one, over 100 participants, and even as far away as from Kano and the UK. This is a robust thing and it's an encouragement. Wassalamu alaikum wa rahmatullahi wa barakatuh. Thank you so much, everyone.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Alhaji. I think we just take a quick closing prayer. I'm Sheikh Najimuddin. I don't know if you're there.
سبحان ربك رب العزة عما يصفون والسلام على المرسلين والحمد لله رب العالمين. السلام عليكم.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you everyone for coming. We really appreciate it. Assalamu alaikum wa rahmatullahi wa barakatuh.